Most traders don't fail because their strategy is bad. They fail because they fail to understand risk management. In this video, I'll be explaining why risk management is the only reason why traders survive. I am ICEKID and I've been learning Forex seriously. And this video is only for beginners who truly want to stay in the game for a long period of time so that they can actually learn how to manage risk. Okay, so what is risk management? Risk management is simplified as how much we are willing to risk on one single trade as a trader, right? So if I think about risk management, the only first example I give to all my students is Subway Surfers. We have all played Subway Surfers. We know that game, right? But there's a main concept and the main key I like about that game. That game has no finish line, right? We keep running till you are dead, right? But the main key point of that game is the more you run, the more coins you get, right? If you keep running, you keep making more coins, right? What am I trying to say? I'm trying to say that in Forex market, we don't trade to just get rich instantly, right? But we trade to survive and we trade to keep going, to stay in the game for too long. The only people who make it in Forex market is the people who stay there for too long, right? So the more and long you stay in the market, the more you learn, the more you earn, right? So if I talk about risk management, it's not about how much you're willing to win, but it's about how much you're willing to lose, right? So if you calculate your losses in Forex market, expenses and all costs and all losses are calculated, right? So if you take your time and try to calculate how much you're willing to risk on one single trade, that will save you more money and more time for you blowing your account, right? So if you say on one trade you're willing to risk only $10, even $40, you know how much you're willing to risk and you know how much you have in your account. But if you are trading based on how much you're willing to win, you won't think about how much you're willing to lose, because your mind will be only focused to how much you're willing to win. At the end, you end up blowing your account because you don't know how much you're risking. That's why risk management is the key in Forex market, right? Because losses are normal. We all get losses, and losses are calculated in Forex market as 70% as you are trading. It's guaranteed that you're gonna make a loss. But if you can calculate those losses, and then if you can only get one win from all your losses, I guarantee if you calculating all your losses and how much you're willing to risk, if you make a trade in one setup that goes right, you are able to be in positive from losing even 4 trades and just win one. You can able to be in profit, right? Let me say if you trade 4 trades and you all lose all those 4 trades and you make another one, you win one. If you can calculate your risk management, you are able to recover all those 4 losses from one single win, right? So that's the main goal of risk management. Though beginners don't really understand how it works and how it's important, because if you can control your losses, I guarantee you no strategy will ever save you, right? If you cannot control your losses, no strategy can ever save you. Only risk management will ever save you from any strategy that you can think of, right? So why most beginners ignore it? Let's talk about why beginners ignore. Why most beginners ignore risk management? And the key is simple. They focus more of making profit instead of protecting their capital, protecting what you have, right? They end up making big lot sizes on one single trade. They end up not even putting a stop loss on one single trade. And they also trade with their emotions, right? Emotional decisions kills most traders, right? So first of all, let's talk about having a big lot sizes. Don't think as though when you add a big lot size, it helps you to win more. But instead, guess what? It helps you to blow your account. And trading without your stop loss, it only adds up on that trade and it will help you blow your account way faster. Because if you trade with bigger lot size, meaning you don't know what you're willing to risk. And if you trade without a stop loss, you don't even know where and how you're willing to risk on one single trade. So at the end, you are trading with your emotions and you have those emotional decisions. You just think, no, when price reaches at this point, you're just predicting when price reaches at this point, I'll take my trades, or when price reaches at that point, I'll take my stop losses, or I'll just cut my losses, right? But guess what? How about if there's news and price just shut down, way down, and you blow the whole count, right? So you end up making those losses instantly. It's not about the market, it's about you. If you learn how to control all those things, you are going to be insane and you're going to be a profitable trader. But guess what? The market punishes those impatient people, the people who have fear, the people who are greedy. I'm telling you, you will never make it in Forex market if you have those things. Only the people who control, and the people who control themselves from that, and the people who escape that scenario, I'm telling you, they're the people who actually make it in Forex market, right? And the truth about Forex is we all lose. Everybody in Forex trading all lose. There's no good trader, there's no perfect trader in Forex market. Even those profitable traders, the masterclass in trading, they all make losses. We have take a look at also S&P 500, the guy who named him Einstein of Wall Street. He also lost about $1.2 trillion. We all lose. There's no one perfect in Forex market, right? But the people who know how to minimize their losses stay long, right? Because losing strikes happen, right? Sometimes this just news come and then it all hit all your stop losses and you all lose your money. But risk keeps these losses so small that you are able to make it in the other day, because trading, we trade to live for another day so that we can maybe make an income to recover all our losses that we make. So you have to know that confidence comes from you yourself controlling what you have, controlling the capital that you have, right? Because your goal is not to win more and more or to win every day, but your goal is about protecting the capital that you have in a single day, right? So as a beginner, you need to just keep it simple. So first, number one, risk 1% a trade, not more than 1%, but less than 1% of what you have. And always use a stop loss. Please, I beg you once again, always use a stop loss in any kind of a trade you're making. Don't move your stop losses to break even. Don't move your stop losses back way down, right? Just because the market is moving down. If the market is about to hit your TP, let it hit it. Let it be so, right? Don't ever move your stop losses just because the price is closer to your stop losses. Let it hit it and you will see another day and make more trades, right? And one trade at a time. If you want, you can make maximum 2 trades in a day. And if you lose those trades, it's fine. When you make your wins in those trades, 2 trades for a day, you're done for the day, bro. That's how profitable mindset is. All those profitable traders, they only follow the rule and the discipline. So this isn't about existing, it's about it just working, and it's about your discipline, right? So the biggest mistakes that most beginners do every single day is about risking more and more money in order to win fast money. But guess what? It does not work that way. You have to know that if you're trading based on your emotional pressures, you will never make it, and you will keep on just blowing your account based on making fast money, because your body is just producing the hormones of you just getting more and fast money, which does not happen in overnight. You cannot be a billionaire in overnight, but instead it helps you blow your account way fast, and it helps you burn out every single day. And you have to know that slow growth is the only key. Slow growth beats that failure, right? If you're willing to start compounding what you have, that's why you have to read some books. Some books also have a principle that we call compounding rule, right? If you learn how to compound just bit by bit, even if you're making $10 a day, that's cool. Even if you're making $40, $50, that's cool. As time going, you keep leveling up, right? Don't risk more than you earn. That's the key point. Risk management won't keep you rich or won't make you rich over time, but it will keep you and it will save you in the market for you to stay long period of time into the market, right? If you have learned something, don't forget to subscribe. I am ICEKID FX and I've been learning Forex seriously, and I post my videos every single day. Not every single day, I mean. I post my videos Monday, Wednesday, and Friday. So keep in touch and subscribe and turn on your notification in case I post. So if you want to learn, please stay with ICEKID.